Hello traders, and welcome back to another episode of Smart Money Insight. My name is Rein, and today we are going to revisit the stock called Tesla. Well, in the previous episode, I shared with you about how to achieve 8% return or even more with Tesla. And if you like the detailed breakdown of the analysis, then please feel free to check out the previous video and you might come back here later. But if not, then stay tuned as I quickly recap some of the key points. Well, when the video was released, Tesla price was about, $389, and I did mention it would break above the 400 price, and this will further trigger a surge that could take it up to about $420 price range. And sure enough, that's exactly what happens, and this offers an easy 8% return for those who bought the stock back then. But now, as you can see, that Tesla price is still climbing up, and many are asking me, Rein, when will the party end? And I've even heard a prediction from the ground that Tesla might hit $600 or even $1,000 price range.
And I've got to say, in all honesty, it's the biggest piece of dog shit.
And that is the reason why today's video is so important, because I'm still seeing a potential upside of about up to 15%.
Ding bong, ding dong, he's Stone Cold Aye.
And this also can be your last chance to make an easy, good return from Tesla. So, well, you want to stay tuned towards the end and let's break it all down. Now let's take a look at its price analysis by looking at Tesla's stock chart over here. Well, when you look at the key trend, the green color trend over here, is kind of obvious that the stock price is still in the strong uptrend. And the price today is sitting at $436, all right? So it seems that the price now is trying to break this resistance level at the $420 range. So the next resistance level could be $460 over here, or the next one gonna be here at $500 range if Tesla sustain its current bullish momentum. But judging from the current trend, I would say if there is a sudden pull down, then this line, it could be a well support line for Tesla, which is around $390 range. And this is what we are going to analyze further, whether where the price will likely be at within a couple of weeks time. Would it be further surge to 460 over here, or gonna be break through this resistance and testing the 500 range over here, or gonna be consolidating around the 420, or if there is a pull down back to this $390 price level. So we're going to analyze it further by using the option market. Now let me bring your attention to see that this $436 apparently is at all-time high, because simply it goes beyond this highest high over here, all right? And a lot of traders kind of speculating what's going to be the next peak level for the Tesla stocks. And to do that, probably we would like to use Fibonacci, and I will take this as a peak, and I'll use this point probably as a trough. Maybe I'll pull up slightly back, all right? Well, probably somewhere around this level, all right? And the reason why I select this point as a trough, this as a peak, well, because if you observe that there is a lot of peaks and troughs point here are sitting nicely on the line. So I believe it is a good setup for the Fibonacci analysis over here. So if you are a Fibonacci traders, then I would say there are three lines, be it over here or over here or over here as the next new high for Tesla. And the first resistance level, I would say, well, maybe around 450, around there. All right, the next one's going to be 470, or the top here is going to be maybe 515, around that range, or 510, I would say, 15, I would say. All right, yeah. So this is the things that we are going to analyze next, whether the new high going to be about 440 or going to be 470 around this level, or it's going to be break above 500 and reaching to $550 as the new high over here. So now let's take a look at the volatility smile chart. Now let's take a look at this implied volatility chart. And for those of you kind of new with the chart, let me try to explain about how to read the chart. Well, this y-axis represents the implied volatility level. The x-axis represents the strike price. And then the one at the bottom here is the volume of transactions. And the blue dot represents the put options and the red dot represents the call options. And right now what we are trying to do here is we try to make comparison of the implied volatility happening on December 11 placed on the left and the implied volatility happening on December 13 that we place on the right. Now let's take a look on the sentiment happening on 13th of December, that the implied volatility here is a very high on the call options, and this suggests that traders are betting on the further upside still. All right, now take a look that there are two prominent volume surge on call options on the strike level of 450 strike level and the $500 strike level happening for both December 11 and December 13th. Well, this is 450 and this one is 500 strike level. So the volume, I think, pretty obvious, pretty prominent over here. Now, let's refer its volume to the y-axis over here, and for the 450 strike level, the volume is about 12,000 happening on the 11th of December, and the 450 strike level, the volume is at I would say about 14,000 happening on 13th of December. So I would say they are about the same, or I just simply say they are the same. And now let's take a look on the volume happening on 11 December for $500 strike level over here. Well, the volume is at 11,000, but when you take a look at the $500 strike level volume happening on 13th of December here is 36,000. All right. And surprisingly, I would say, well, there is about 200% increase of the volume. So this means that the number of bets that the stock price exceeds $500 was double, and this definitely is a bullish indications. But there is something very important here that I want you to really pay attention closely, which lies on its implied volatility. Well, the implied volatility for the 450 strike level here on the 11th of December is at 0.65. And they're just about the same with the 450 strike level happening on 13th of December 24. The implied volatility is 0.65. Now, if you compare with the $500 strike level here on the 11th of December, well, the implied volatility is about 0.67, and it remained the same for the 500 strike level here happening on 13th of December, which is about, well, this is 0.67. Despite the volume increased by 200%. It's kind of weird, right? Yeah, so one of the ways to interpret this situation is that we can conclude that traders are getting less optimistic that it would exceed this $500 price level, And I would say this quite coincides with our Fibonacci and trend channel drawing earlier, that placing $500 level as a major resistance level for this stock Tesla. So I would say that this option market showed the bullishness of the stock is expected to subside very soon as the price goes higher. However, as today price, I would say today that the stock still in the bullish mode. And you can also further analyze it by looking or judging or evaluating from its put options. Now, let's take a look at this back on December 11. You can discover a prominent volume happening on the 400 strike level over here. All right. So one of the way to interpret this is that this $400 price is a key support level happening on the 11th of December. But right now, if you look at the volume here for the put option, they're kind of like well spread, well distributed among these put options. So I would say that this appears that the market is not really anticipating that the stock will go down in the near future, or the other way around to interpret it, that right now the Tesla is in the state of transition to form a new resistance level, which judging on our early drawing, the trend channel drawing, this probably could be around 460 level. All right, that's based on the trend channel drawing. All right, but that's also given if the Tesla successfully crosses above this price level. Now let's take a look now on the trends for the implied volatility. But before that, let's take a look, is there any available smart money opportunity? And to do that, let me try to use my proprietary system called Trader GPS system. But first, why identifying smart money entry opportunity is so important? Well, as you probably know, that systematic inflow of smart money often drives price higher with relatively lower risk, and this creates an excellent opportunity for us as traders to capitalize on potential profitable trades with minimizing the risk. Now, let me try to demonstrate how Trader GPS system pinpoints the potential smart money opportunities and how you can leverage this information to optimize your trade entries. Now, let's take a look at this page. Now, to activate your Trader GPS here is very simple with just a click of the buttons, all right? And then the system will help you to compute and evaluate any opportunities, smart money opportunities available happening on the stock. Well, so your job as a trader, just try to identify those arrows, all right, with facing upward, like this one, this one, this one, and this one. So the system smartly tells you that there is a possibility that smart money will come and join into these stocks. Well, so now, do you see that your job as a trader is becoming so simple? And as what I mentioned earlier on, if the smart money fails to join this trade, or somehow it doesn't really push the price higher, then your risk kind of minimum. So for this instance, if you ride on this trade, then well, it's kind of stay flat, all right? So you don't lose money over here. But on the second opportunity over here, if you successfully join over here, well, there is a surge, all right? And probably this is, I would say, about 40% increase, all right? So if you could, if you can join this trend, all right, you make the entry here, you can exit over here, then potentially you can make profit up to about 40%. And the same thing happens about the same here for the third opportunities. It tells you there is a potential smart money coming into the stock, and if you could ride together with the smart money, you can potentially make up to about 20%. Now, as for the last entry opportunity here, the fourth one, all right, it tells you, indicate that this is the time that potentially smart money come into the stock. And if you join this ride until today, if you keep the stock, well, I would say you could potentially earn up to, well, This is $290 and today is $436. So, well, this is about essentially 50% return. As simple as that, alright? So for those of you who want to know more about Trader GPS, how it works and how it can help traders to identify trade entries opportunities smartly and easily, then you can check the link in the description below. Now let's take a look at this implied volatility trend chart. And for those of you kind of new with the chart, let me try to explain about how to read the chart. Well, this y-axis represents the level of the implied volatility, whereas the x-axis represents the date. The red color represents the call options. The blue line here represents the put options, all right? And let's analyze the trend happening for this implied volatility, all right? And historically, as you can see, that the red color line always stay above the blue color line. So I would say that the call option really overpower the fear in the market, and this explains about why, well, this stock Tesla keep going higher and higher until, I would say, interestingly, you can notice that there was a price correction on the December 12th, which lead the call implied volatility to drop below the blue implied volatility for the very first time. Now take a look at this point, all right? So the blue, there's a correction from the red, and the red drop below the blue lines, all right? So this signals the emergence of fear among the bulls, all right? And this shift, I would say, warrants a deeper analysis of the trend to arrive at a more conclusive predictions. However, this initial fear sentiment could help to explain also why, based on our price and implied volatility analysis earlier, that the $500 price level might act as a significant resistance for now. Well, based on the current sentiment, I would say it's very, very likely for Tesla to go beyond the $450 price, and it's even will surpass the $460 price level, which I expected pretty much as the next resistance before it turned into a support level for Tesla. But from there onward, Tesla could still potentially surge further up to test the $500 price resistance. However, according to our analysis, suggesting that breaking above this $500 price level may prove still challenging for now. And at the time, if correction happens, then this $460 price level could serve as a reliable support. And as a result, many sophisticated traders seem to view prices nearing this $500 as an attractive level to sell, while more risk-averse traders might prefer setting slightly lower price target for their exits. So that is all my analysis for the Tesla today. If you believe my sharing is useful, well, please give a thumbs up, subscribe, and click the notification so you don't miss out any good opportunities. And please leave any comments below if you want me to analyze your favorite stocks whenever the opportunity comes, so I can share more smart money insight for you. And see you at the next one, and trade smart.